We would like to offer all of you a special salute on the left-hand side of the aircraft.
What's happening, guys? I hope everybody had a fantastic weekend. We have another Sunday video for the 17th of September. This very well may be the shortest video that I've made. Just ended up running out of time. I had to run up to Maine today to take the things off the windows just in case, for the hurricane. Last time we had rocks up on the lawn, and this time it just ended up being low tide when the peak of the storm hit, so we got pretty lucky. Had it been high tide, a lot of times what happens is it looks like high tide, but then there's still another 3 hours before high tide hits, and then it ends up smashing against the wall, and you have water hitting your house and rocks flying at it. So anyway, that was the today, and then I had to prepare to come to Boston. I'm here now because tomorrow morning we're leaving at 6 a.m. and heading to DC for the day. So for those of you guys that have been involved with Traders for a Cause or have really paid any attention throughout the years, you know that Honor Flight New England is something that I personally support, that we've supported, and ended up being one of the most favorite days of my grandfather's life. So tomorrow we have 4 World War II veterans going, I think 13 Korean, and then the rest are Vietnam veterans, which are all being flown out with volunteers, or usually it's a family member, but this time we're on a Delta flight. There is a veteran crew, and it's going to be a very unique day because this is something that we've been working on for quite some time, and we're going to share it with you guys at Traders for a Cause in Vegas. So it's going to be a good time, and hopefully I'll have some photos to share that I'll send back to Damien throughout the day, that he can kind of throw up while I'm talking, and you can kind of see what it was like. But anyway, we've got short and sweet. So HOLO. Most of you guys probably saw that thing tank 80% and then another 20 or 30% or so. Typically, it's standard that these things do fade about 80% on the day that they liquidate. But the problem is, as you guys know, we never know which day it's going to be. And there's a lot of folks that try to nail that day, and if they're right, great, they made money. But if not, they're really, really wrong, right? And sometimes it goes straight down, sometimes it goes up into a circuit halt, and you just never really know. So for me, I'm not interested in trying to be a hero and nail the top on that particular situation. There is a bunch of things that I need to see happen before I start to get involved. I have absolutely zero interest in being first in. If I do have an early entry, it's minimal size. Not that I'm even going to size these things to any degree compared to what I used to anyway. But I'm not looking to be aggressive at an early stage. I need to see proof and go through a few things that to me prove that, hey, today is the day and it's going to be liquidated. So anybody that has been watching Sunday videos know, after HKIT we talked about HOLO. So we've had a lot of these in a row. So what that does for me is say, hey, be careful on the next one, because you know what? Everybody saw HKIT, and everybody wanted to get the next one and missed HOLO with size. And so they're all going to size up on the next one, right? So what does that mean? That means you need to be extra, extra cautious, and don't just trade these to trade these, and don't just size up to size up. That's how you get hurt. So again, if you are unfamiliar with these, stay away. There is absolutely zero reason to touch or anticipate these types of trades. There's plenty of downside after it's obvious that the day is today that it's liquidating. So other than that, NVOS, we talked about that swing last week, and it was actually on Monday morning that it started to take off, and the trade ended up doubling again. So hopefully you guys nailed that one as well. Haven't really had that many swing trades. The ones that have gone, bigly. You guys saw ACB on last Sunday video. We went over ACB, and the idea of ACB was off of CGC and Tilray and all those other names, all the pot marijuana type sector that we were prepared for. And the ones that they haven't really been fizzling that far out. If they break trend, I'll move on. But it's been pretty good market for just kind of riding momentum. And so other than that, AXLA was another nice squeeze trade recently. And the biggest thing I would say last week was noticing the channels. WE ticker, did a reverse split, and we spent a lot of time talking about, basically being stuck in the channel and sort of how to trade that. And the way that I explained it in the Traders Lounge during the day is, if you're reacting, basically, reacting to some sort of stuff move into what is likely resistance, well, when it flushes, your job is to proactively cover. You got to be there. You got to be playing offense because we don't have proof yet that, yes, it wants to fade today, right? So for all we know, it could just be bouncing like this the entire time. And if you're not proactively covering, you're just going to get chopped up. There's a good chance that maybe you add a little bit because you're right, and then it pops back up and you cover because you're nervous. So really the idea is focus on that channel. Don't set yourself up to react at either of these levels, right? Because if you're going to start to scale in and use this prior level as a sort of stopping point, well, it needs to test it sometimes. And if you're going to be emotionally charged at that line, then just don't size up or trade smaller so that you can let it kind of jump around that level. So you'll see, or you did see on my WE charts 2 days in a row that for the most part, I just let it do its thing and then participated after it blew out at key levels. And if I was trading into some sort of exhaustion move, I was proactively covering. Then we had FWBI. FWBI was a fantastic trade. Really, one of the biggest things that I've been preaching this year is just patience. I'm not trying to kill it. I'm not trying to step in front of these names pre-market, and there was nothing better than just letting that thing do what it wanted to do all morning, and then it went almost into a circuit halt off the open, and it paused, and I went ahead and started into the short side, and it literally didn't uptick from that point forward. So that was a really nice opportunity. Plus they did the midday raise, and then ended up going right back to the lows. So then last but not least, we had ARM, which is the hottest IPO we've had in quite some time. Got all exciting and ramped up into the close, gapped up to the 70s before fading off. So we had a nice gap and sell-off opportunity, and that should offer a few more trades the next couple days, whether it's a gap and fade or some sort of gap down, flush, and a reversal. But whatever the case is, especially on these types of things, you don't want to get in a fight when you're wrong, because they're going to go one direction up, one direction down, and then it's going to consolidate, and it's picking a trend. And if you're on the wrong side and you think it's going to be like the other days, you're going to get in trouble. So just remember, wait for the trend to confirm and agree with you. All right, so for the second part of Scan, as always, I am not a financial advisor. These are not buy or sell recommendations, and this is for educational and informational purposes only. The main watches for me is going to be ARM. ARM, again, was the recent IPO this week, and I'd be prepared for two situations, right? That doesn't mean I'm going to be right either way. It means I'm coming to the market with a plan, and if it has a weak open and it flushes, I'm going to be interested for that reversal trade. If it has a gap up and it pushes towards 62 or 63, I'm going to be looking to fade that trend. So those are the two plans that I'm coming prepared with, that I would react with. If it does neither, I'm not going to trade it. I'm going to wait for a setup that I'm familiar with. But if it does one of the two that I'm prepared for, I'll be ready to react to that situation. Next, we had NKLA again. It's been a while since this thing has, it obviously had run up from, sub dollar range up to 350s. They had the earnings. They ended up, I forget if they raised or they authorized shares, whatever it was, they, obviously needed to dilute. And it's been fading down back under a dollar since. It had the first day of 200 plus million volume in quite some time. Started to firm up, and then we had that nice gap up. That is an A+ setup for me. And, it wasn't a huge move, but it is liquid enough for me to trade really whatever size, you feel comfortable trading. When you have a stock like this, it literally had two 300K, size on both sides at any given moment, and it's not moving unless it's trading a million shares, and it's so liquid that, you can literally trade, obviously within reason, but this is one of those types where it doesn't really matter your size compared to something where, we've talked about where if it's too thin, you can become your own risk, right? I can't really oversize on a trade like this. I mean, technically, obviously, anybody could if you're shorting millions and millions of shares, but you can trade hundreds of thousands of shares without really, moving the tape at all. So this kind of liquidity I absolutely love. And so in the morning, I would love to see, I think you should be prepared for two trades here. I'd love to see some sort of gap up and push, but if it has a weak open and it holds versus that 110 level, I want to be a little bit more cautious because 110 was where it was soaking. And if that's the case, then, you can get into a situation where, you kind of, it has a weak open, you feel good about the short, and then you start to believe that it's going to unwind and it pops the other way. So just be cautious if you start to get aggressive and you notice it holding at 110, because that's actually where the initial squeeze started. It was like 103, then 110, then 115, and then we had that nice 20-cent gap up. And obviously the great entry on Friday for that short. So again, some sort of gap up, blow off and unwind, or weak open. If 110 starts to firm up, look for that red to green move. And given the volume, it's traded almost 500 million shares the last 2 days, you could have that T+2 kind of move come Tuesday. So if we're consolidating over 110, I could see this push towards 150. But if not, and it just gaps up and it kind of fizzles off, it should be a nice fade. FNGR was a fantastic opportunity. This is one of those that, if you kind of draw a line at the $7 mark on the daily chart, you can see that that was the prior level that it hit. Then it faded off, consolidated, and we kind of went back and retested that daily resistance. And sure, it broke right through it. So a lot of times people that have, stops or they kind of have their game plan that if it breaks highs, I'm going to cover, or if it breaks highs, I'm going to buy for a breakout. That transition, that move happens, and as it starts to fizzle off, the trade starts to come back in. So I think that everybody that was sort of using 7 as their guide to make a decision, whether that means stopping or breaking out, buying the breakout, everybody was kind of, it was a day or two above, and then it just came right back to where it was. So I would be looking at this thing to continue to fade. I'd love to see any morning push, 20, 30, 40 cents, and then fade back to flat, back down towards the 5 level would be ideal. Next up is the failed follow-through section. So in a situation like this, these are two cheaper ones, LIFW and AGRI, both around the same price range, just about within a few cents. But a lot of times, these are one-day wonders. And if that is the case, and we either open flat or have any kind of push in the morning, that's what I'm interested in. And then it just kind of fades off, throughout the day. And these probably are an avoid for most people, but I like to see them because they're great trades that people forget about, and then you look back and they're right back to where they were after that one-day wonder. It takes them 2 or 3 days to get right back down, and it's just something to sort of add to your tool belt for trading. I mean, there's been so many opportunities on these AXLA and NVOS and I don't even know. There's been so many names that I've never even seen before, but people have no problem chasing them. They go up a dime real quick, 15 cents real quick. And the key is just don't step in front of it. But the fact that they go up so quick, when they come back down, they just slowly, steadily fade, and they won't go back up as quick that second time just because everybody's bagged. So everybody's like, yes, I'm going to get out. And then they start to hug the offers and the offers and the offers and the offers, and it just keeps on getting heavier and heavier and fading off. So that's why I like these things. But the key is don't try to be first. let it peak out. Next up, we've got Getty, GETY. Volume is starting to really pick up. It had faded down to 4, back up to 650. Nothing that I want to, I have it on the failed follow through section, but it's nothing that I want to jump in front of, because if you jump in front of it, who knows? Is it going to skip to 680 and 7 and 750 or 8? So I want to see it blow off. We've got volume. Volume is supporting this move. It had a pullback on Friday, and it came back up. So it's had that chance to kind of work traders out. And so when we see wicks like this on the daily, I always talk about that could add longevity to the move. So keep an eye on that, but I'm hopeful that this continues to go up a little bit higher and blow off. It would be ideal. It reminds me a lot of something like the finger chart, FNGR, where it doesn't matter where it's going to peak. Just keep an eye on it, let it do its thing. After it blows off and it fades, if it tries to retest and it fails, that's when I get interested. Not trying to find the top, not immediately when it first pulls back, but after it retests and it proves that, hey, we're not going higher. That's when I get interested, because now I have a set risk. And then we is going to continually be on watch. The volume's absolutely gone now, so you can't really trade as many maybe shares as you might have felt comfortable with before. But I do feel like this will continue to fade off. Probably back to 52-week lows. Maybe one good push again with some covers. Since the volume's gone, it did trade 100 million shares in 2 days. So there's a good chance that if they have a PR or it starts to base at 4, we could have that one day where sort of the cover comes in and then it just starts to accelerate, just because everybody's like, oh man, I should have covered. Oh crap, it's still going. All right, I got to bail. Oh no, I'm going to lose all my money. And then that's the top, and then we get a fade again. So that's what I'm looking for. I'm looking for that sort of kind of morning shove, pull back, and then squeeze out, and then I get interested. And if you guys don't know what I mean by that, go back and look at Verb last week, and we were talking about where it had that morning move. It consolidated above VWAP, then it cleaned everybody out, and then the trade came, and it didn't see any higher. That's exactly what I want on WE. And then last but not least on the failed follow through is NVOS, which has been fantastic. You can see that there is a soaker at the 35 level still. So, for me, I want to see gap up 40-42, excuse me, and then potentially fade back under 35. But as long as it's over 35 area, 34, 35, I think we should assume that it's going to, consolidate and hold. Once it starts to peak at 35 multiple times, you'll probably start to see it get heavy and then start its descent back down to where it came from. And then the continuation side. You guys should all be familiar with ACB, CGC, Tilray. This was sort of the big idea 2 weeks ago on a potential swing trade. I compared it to AI and Bitcoin and, even back to the oil names. But I felt like we were due for a real sector move. We haven't had really a all-out sector move like we've seen in Bitcoin and oil and all that stuff in quite some time. So I felt like this one was close, but there's been so many false, reversals and breakouts on this kind of sector and this theme that, why this time? And so now we're starting to get proof that there is a real bid there as well. So it's been nice to kind of see that because you want all these people, all these bag holders that have been in here for a long time. You want them making money, because that money then comes into the next plays, and then small caps stay as hot as they have been. So It's been nice to see these. And MSOS, if you guys remember, that was another swing. So the goal, obviously, I had the swing trade, and then we had the short trade, and the goal was basically any good flushes, overextensions to the downside. I wanted to kind of reposition on the long side. So I did trade a little bit of them last week, but nothing really to shout about. And now I'm just sort of waiting for this next kind of consolidation to end and see which way are we going up for leg number 2, or are we going to stay heavy. So no real bias, but I am looking for dips as long as it holds, in this case, like ACB, as long as it holds over 85 or 90, as long as CGC stays over, 120. That's what I'm interested in. And then we've got a couple other. COSM is possible liquidity trap. You've got 40 million shares down to virtually nothing. So 150 is that trigger. If you guys don't know what I mean by liquidity trap, go back and review EDBL, the edible chart. And it was actually 150 was the trigger that we had talked about. So I think 2 weeks ago I went over that trade that I had made when it went from 150 all the way up to like 350. And sort of anticipating that. It's not always, it might not happen this week, but later on, if you set a price alert, 150, 160, then you won't miss it. But this is definitely a nice little setup for a liquidity trap. AKAN, another one, nice walk up. This is one of those former liquidation plays, and now they kind of have cleaned it up since. So they've been walking it up. So we'll see what happens with this, but I just want to stay familiar with it. Just like all these liquidity or liquidation plays of the past, just like HKIT, just like HOLO, all these ones that you guys have been prepared for. Why did you nail it? How did you see it? Because I never took it off radar, right? So I want to stay familiar with these and just set price alerts, and when and if they pull the bid, I'm going to be prepared for it. If I miss it, I miss it. And then last one, BIOC, another liquidity trap. We had 100 million shares of volume, and then it pulled back. There was 3 days where it consolidated around 125, and then since then we've had dips and rips, in the wicks that we talk about. So for me, as long as this stays over 150, I'm extremely interested, and there's a good chance that we could see a secondary breakout. Personally, I haven't looked too much into if there's any other catalyst or things that are coming up. If so, it now almost looks like it might be looking to kind of run into some sort of catalyst. So I'll do a little bit more poking around before Monday. But this one reminds me a lot, and I don't remember the exact ticker, and I'll probably figure it out. At first, I thought it was like BPTH or something like that, but it reminded me of the same thing where company needed money, created a whole bunch of volume, and then it kind of held oddly well, and then they ended up doing a raise, but it was like a private placement instead of a bad offering with terrible warrants that everybody was sort of expecting. So I think all the shorts got on the wrong side of the move, and then it just propelled it like crazy, and that's what this is setting up like. So I'm cautiously optimistic, but if it fails and it breaks 150, obviously it's an avoid for me. But for now, there's definitely potential for that secondary move. So I think that's about it. And again, like I said, short scan tonight. I will pick T-shirt winners and everything next week. Get back to doing that. Thank you guys for leaving me all the interview ideas. The people, I'm going to go through a bunch of those and catch up and hopefully get some. We should have quite a bit of content coming here soon. But otherwise, I will hopefully send over some photos. You get to see some of the honor flight type stuff, and I hope that you have a good rest of the weekend. Catch you guys in the room on Monday.